Hello and welcome to my YouTube channel. This is hopefully first of many videos. Let's see how this goes.
Boring.
I've developed a trading strategy that is scalping. It's the daily 1 minute chart, and this is on the Nasdaq 100. And I've developed it on MT4. That's where my indicators developed, and it will just give me a signal in terms of what to look for in terms of direction. So whether it's going to be a short or long. It just tells me where to predominantly expect price to continue in that direction. So that's the key. It's not about finding the highs and the lows and timing the market. It's just about trend continuation, and then you or me just trying to grab some pips as we're scalping. So also off the back of it, what I do is post my signals on Twitter so you can validate those signals. And just to confirm also, there are losses, and I'll be showing those losses not only hopefully in my trading, which I'm hoping to go live maybe hopefully next week, or if not the following week, not with a large amount, but with something I hope to showcase my strategy, and hopefully we'll make some pips. The key to this is the risk reward. So let's jump straight into this. Right, so as you can see here, this is the X Twitter screen grab that I've done. You can see here the signal was posted at 8:09 a.m. UK time, and you can see the screen grab from the mobile that I posted. So I'll be uploading or actually putting the links up for X Twitter. Some people call it Twitter, some people still call it but yeah, I'll be going back in between the two, X and Twitter. Apologies. So this is the screen grab from X, and as you can see there, it's 8:09 that I posted this. And let's have a look at TradingView. Okay, so as you can see, Tuesday 5th of March, 8:09 a.m. UK time. I said that will be a short signal. So for the Nasdaq, as you can see here, if you looked around here and you looked for trend continuation and a short, and there's a potential reward for what is it, 80 pips, right? So if you look at the strategy in terms of where you could have got in and where your risk would have been, if you'd got in not long after, I'd used Bollinger Bands. I think they're pretty good for just a standard deviation and for some extremes, for high and low, that will sort of help guide. It's not I won't class that as the entry or exit strategy in itself, but it's just a guide really more than anything. So I posted 8:09. I'm trying to post as soon as I can, really, and as you can see, not long after, if you probably looked at that high test again from the previous high, you could see that if you'd got in with a tight stop, and your risk to reward would have been way greater. It would have been probably about, I aim for 124 or 125. That is the key. So as I say, there are losses, but your risk reward will hopefully outdo the losses for you. So if you looked at it here and you've done, let's just say 2% on 1 to 4, you would have 40-50 pips with with a bit of spread or slash commission.
What? Bro, what are you talking about, man?
That would have been achievable. So if you're looking at 10 pips stop above the high, or 5 pips stop above the high, and as you're getting in, you're looking probably about 10 12 pips all in. So you're aiming for about 50 pips for roughly around 1 to 4 we're looking at. So that's well within this remit here. So that's what I generally aim for, 1 to 4, 1 to 5. And like I say, if you would have gone in with 2% risk, your reward would have been, well, you do the math, it's going to be either 8 to 10% just on that one trade.
Do me a favor, please. Get out of here. Get out of here, man. Shit, I'm saying.
Okay, so now let's look at the next signal that I posted on X. And as you can see, the signal that I posted, it was at 1:56, before, half an hour before the US market. So it's a good time sometimes to get in, I think. This is where the volatility comes in, and you do get some good trades. And here's an example of a loss. So as you can see on Twitter, this is the screen grab that I posted on Twitter. And as you can see here now on TradingView, the actual time that I posted, and then you can see the trade play out. Actually, by the way, I probably wouldn't have taken this trade myself personally.
Stop it. Get some help.
But I'm going to class this as a loss because there's always the potential to come in and take that trade, and so we're going to class that as a loss. So that's, if we've done a 1-to-1 on that would have been, you would have lost 2%. So on the day you would have been up 6%. Right. So let's look at the next signal. So as you can see here on X again, I'll post all my signals on X so you can see. This is straight after, so it's at 2:12 p.m. So shortly after, I said, right, the continuation back into the short zone. So look for a short on the Nasdaq. So let's go and now have a look. I mean, as you can see here, I mean, the risk reward of getting in even further down would have paid off handsomely, because if you look at this is looking like, what, if you'd got in not long after, you're looking at what's that, 300 pips. So if you're getting in with 10-15 pip a stop, your risk to reward, I mean, I generally, like I said, it's 1-to-4, 1-to-5. I'm not going to say to you I'd gone and taken this 300 pips. I would have taken my 1-to-4. That's what I generally aim for. Again, I'm repeating myself here. It's 1-to-4, 1-to-5. So based on that, I would have been another 2%, and then 4 I would go onwards, so 8%. So on the day plus your 6, you're looking at roughly, without just roughly doing the maths in my head, you're looking at, in terms of 16%, I beg pardon, 14%. When I mean doing the maths, I mean because you've lost some, and then you've lost one trade over 2%, and I'm not giving you the exact value, but you're roughly looking at, you're definitely up on the day, and you're looking at about 14%. So what? I hope you enjoyed this. I'll be posting my posts on X. Apologies, this is my first video, and hopefully one of many. Thanks for watching, and I'll see you next time.